Hi, welcome to class 1, and in class 1 we will cover a topic like why stock market exists. Well, we are going to start a course on stock market, and we must know that what is the real reason, main reason behind why this market exists there. Well, we can take a pause and think about it. So when I'm giving you this lecture, you can also take a pause here and think about it. What is the natural answer you give? So learning is all about, imagining things and answering, questioning. So you can question yourself also why stock market exists. Well, so when I ask this question, when I start not a normal, not a video class, but a physical class or webinar, I get a lot of answers. Let me show you one or the other answer. So some people also says that it exists so that we can invest money here. Well, some of you who are taking this lecture may have a similar answer that yeah, it exists because we can invest our money into stock market. All right. Some may say that okay, it exists because it can make us rich. It is there, so stock market is there to make people rich. Well, yes, if you invest wisely, you can become rich one day, but is it really that the reason why stock market exists, that we go trade? And for some people stock market exists so that people can play gamble, they can trade and trade based on their luck and they can make money. I mean, I call that gambling, honestly speaking. So let's first talk about you and me. Okay, so put all this reason behind whether they are the correct reason or not, and we will talk about something very common which we have been seeing from very long time, and the topic which I'm talking about or want to talk here in this video is about businesses. So let's say you and me have to go and start a business, and we all know that there will be money involved to start the business. So to start a business you need a lot of resources for sure, but apart from that you need money, because money is that common resource which can buy every other resource: human resource, material, raw material, building, machine, whatever you need you can buy through money. So to start a business, when you need money, where do you go? Well, you take the money from your family first, maybe, and self. So if, let's say you are a person like me who has already worked for 10-15 years and saved some money, he can invest his own money, or some fortunate people also get money from their family, or in the beginning they can take it from their friend also on a debt basis or something like that. So in today's startup world, it is also called friends and family round, FNF round. Yes, so you can raise money for your business from your friends and family in the beginning. Okay, will that money be enough? Yeah, for some people that money can be enough. But let's say your business is growing, or you know that if you install more machine, since there are orders in the pipeline, or there are, if you are into services business and you have hired 5 people, you know that you can get another contract where you may need 20 people, 25 people, and your billing cycle is 3 months, and you don't have money to pay them salary for next 3 months. Or if you are into product business, you are selling product, and you know that there is more and more demand and you can have more machine, more factories, and that's why you can expand the business, but the profitability will be limited. That profitability is not enough to set up another unit. Where do you go now? Well, then probably you can go to the bank. You may have some collateral with you, your house or jewelry or anything which can be put into the bank, and loan can be secured loan. So initially, if you don't have a big setup of your business, bank will be interested only into probably giving you secured loan. So you can go to the bank and take either of the loan, basically secured loan or unsecured loan. These days there are so many schemes where you can also go and secure unsecured loan. Okay, so bank will give you the money because this is their business. Let's take a pause of 2 minutes and also understand what is bank business. So what is bank business? Bank business is very simple. They take money from us, you and me, common people, and we give certain interest on this money. So FD rates, let's say 7% they give you on your FD, and when you go and take money from bank as a loan, they give you at a higher interest rate. So even for house loan kind of stuff, they can give you 9% interest. They can charge you 9% interest. All right. They also give a lot of money to businessmen, because through business loan they earn higher interest. So the bank businesses take money at lower rate means the rate at which they are giving you FD, or they give interest rate on the current account, which is even lower, 4% or something like that, and then lend this money to someone who can give them higher return. Now, who can give them higher return? People who can make more money at a higher rate. Where is this possibility? This possibility is only in the business. So what happens that bank take fixed deposit money from people like you and me and give it to businessmen, and that's their business. 7% on FD, 10% on business loan, let's say, and 3% is the profit they make on which they run the bank operation. Great. Some loans are higher, even 14% and 15%, depending on how secured or unsecured that loan are. So this is bank business, you and me know. Now, but bank has to run this business successfully without getting default. So what will happen if they have taken money at 7% and given it to people on 12% and 13%, but all those people don't return the money back to bank? So bank will be in mess. There are situations where bank can go into a mess because they have given it to such people who didn't give them return and principal as well. So bank also have a formula, every bank, and they follow that formula to give the lending. Well, in that case, they look at the collateral, they look at the prospect of the business, they look at the brand, they look at the people behind them, they look at the history and so many things. But you have just started your business probably 3 months back or 6 months back. In that case, they will give you a loan, maybe against your secured property or something. They may give you some loan also looking at your orders and other stuff. But again, there will be a limit to it, because that's how bank has to function. They will try to secure their money, so they will not give it all money to just one guy. They will distribute their risk also among many businessmen. Well, now where you go, and let's say your business is really expanding here as well, doing really well. So even if bank has refused, now where you will go to raise money? We are talking about you and me, when you and me are aspirational to make our businesses big. Well, so this was the bank model, and there's one place where you can go basically. And what is that place? So you can take a pause and again answer that. So you can go to public. So you and me can go to people like you and me again to raise money, who are not aspirational enough to create businesses. Okay, so they are aspirational. They are aspirational in different, I should not tell that they are not aspirational. They are aspirational to create value in the society by doing job. They are aspirational enough to become scientists, engineers, doctors, and so many others. So people have different profession. Businessman is having a profession of running the business. Well, so you and me, when want to do business, we can go to people like you and me who don't want to do business, and we can raise money from them. We can make them partner of our business. So we will do a valuation of our business with the help of a stockbroker or a company who are having specialization in this. We will cover these topics in the later chapter, and then they go to the public and they raise money from them. In case of bank, they used to give interest rate. Here, they will not give a fixed interest to public. What they will give? They will give a portion of their company to people. So I may have 100% equity at the moment, me and my partner into the business, and let's say 5% of my equity, our equity, we want to dilute or give it to the people, and against that we can raise money. So what will happen that our 100% will come down to 95% and 5% partner public will become. And Why I have taken this word public here is because of this IPO. So very first time when you go and raise money from the public, you bring IPO. It is the full form of the IPO is initial public offering. So some people who are just starting into stock market and the newbies, for them this topics is are probably new, but for many of the participant I assume this is not a new topic, IPO. But yes, so the very first time when you go and raise money from the market, you bring IPO, and that IPO get listed on one of the stock exchange. We'll talk about this whole ecosystem in the later chapters as well. But yes, stock market is there to raise money for businesses. Yes, and for the very first time when a business raise money from the market, they bring IPO, and they are called raising money from the primary market. So stock market, now we are going a little into some concepts. So IPO you know now. Now there are two type of market. One is called primary market, another is called secondary market. So stock market is there to raise money for the business, and a businessman raise the very first time through IPO, and that IPO market is called the primary market. Well, some people may be very lucky to get really good company in the IPO phase, and some people may not. If let's say they are coming with only 5 lakh shares, but let's say there are more than application is there for more than 5 lakh shares, so it's not everybody will get. So they have a formula to distribute it. They will distribute it. Some people may not be able to buy it in the primary market, but they can buy it on the day of listing. So in primary market, there is given a time period within which common public can go and apply for the IPO. Once they get the IPO, on the day of listing, they can either sell it or they can buy more, because then the stock start getting traded into the market. So when you see Reliance, Infosys, TCS, Wipro, all these shares trading into the market, and you see their market price every day changing, that is happening in the secondary market, right? So let's see how secondary market look like. Well, you got two exchanges, NSE and BSE, the major exchanges. There are regional exchanges as well, but we will focus on NSE in this course, and every time go and refer to NSE. Okay, probably I can give an overview of BSE also as one of the supplement chapter in the in at the end of the course. But here throughout the course we will just consider NSE because it is the largest exchange. It covers almost 96% of the total volume. This should be one information to you. Many people think BSE is older and they might be larger, but no. Situation is NSE came late, but they had good technical advancement in the very beginning, and that's how they are the largest platform for share trading right now. So this is how the secondary market look like. You go to the NSE, open this equity stock, and then you can see that these many stocks are there trading. There are many more stocks which you can see. They are kept into different category. We will cover these things in the later stage. But here, let's say I'm showing you something called Nifty 50 stocks. It's a 50 stocks this thing. Infratel is one of the company. In the daytime, it was trading like this. So secondary market is something which start in the morning 9 a.m. and it closes at 3:30. From 9:15 active trading start, and that trading happens in the secondary market. Well, I would like to summarize this now, that stock market exists because businesses need money. So the conclusion here is, when you are going and deciding to start investing into stock market, you are actually investing because some business require money and they are raising it through IPO, and then this stock came into the public and then getting started trading to give the return to every shareholder. So at the end of the day, you are going to invest your money into one of the business only. And again, if I talk about you and me, we can do wonderful businesses, we can do wonderful in any kind of businesses, and we can also screw up businesses. Businesses do fail. So the purpose of bringing this question in the very beginning, that why does the stock market exist, is because I wanted to tell you that stock market is all about businesses, identifying businesses, investing into those businesses. But businesses fail, and that's how it becomes risky. Any business can fail. Even I can fail a business, you can fail a business. So accepting this fact also, that if I'm going to invest into 50 stocks, 15 stocks, one might I might lose my all money into one of the stock, is very important to understand from day one. And that's why I included this topic in the very first lecture, why stock market exists. So stock market exists because businesses can raise money and we can invest into those businesses.